Can France survive after losing Africa's mineral resources? France's economy, already facing serious structural challenges, is likely to face long-term damage from losing privileged access to African minerals, particularly in West Africa. Here's a breakdown of what this loss means. Energy crisis and uranium dependence. Niger, now cutting ties with France, supplied nearly 20% of the uranium used by French nuclear reactors. France depends on nuclear power for around 70% of its electricity. Without cheap Nigerian uranium, France must now seek costlier alternatives from Canada, Kazakhstan, Uzbekistan, or the spot market, raising energy prices at home and weakening its energy security. Loss of African gold and resources. Burkina Faso, Mali, Guinea, and others were major gold exporters with strong French mining links. French companies such as Orano, Uranium, Total Energies, and others were heavily embedded in African mining and energy sectors. France risks. Losing gold revenue streams. Losing access to bauxite, used in aluminum production, with Guinea being a top source. Facing more expensive imports from non-African markets, increasing trade deficits. If you like content like this, please like and subscribe to keep this channel alive. Thank you. CFA franc system disruption. The gradual collapse of the CFA franc monetary zone, long dominated by France's central bank, undermines France's ability to control African foreign reserves, previously held in French treasury accounts. Extract signage and transactional profits from African currency operations. If countries like Burkina Faso, Mali, and Niger leave the CFA system, France loses both monetary leverage and billions in indirect profits annually. Diminishing corporate profits. French multinationals in telecom, Orange, infrastructure, Vinci, Bouygues, and energy face expropriation or contract losses in countries cutting ties with France. Over time, this reduces corporate tax inflows to the French government. Weakens shareholder returns, damaging France's stock market and pension funds. Geopolitical isolation and competitiveness. China, Russia, Turkey, and Gulf states are rapidly filling the vacuum France is leaving behind. France risks being shut out of future African infrastructure projects, mineral concessions, and regional trade blocs like BRICS Plus and the Alliance of Sahel States, AES. Its declining influence weakens its bargaining power in global trade talks. If you like content like this, please like and subscribe to keep this channel alive. Thank you. Economic outlook, from stagnation to decline? France was already grappling with high public debt, over 110% of GDP. Sluggish growth, 1% per year pre-2024. High unemployment, especially among youth and minorities. Rising energy and food costs after the Ukraine crisis. Losing African mineral flows worsens. Inflationary pressures, costlier energy, metals, food. Industrial competitiveness, higher input costs for French manufacturers. Widening trade deficit. Increased social unrest, as seen in past protests against high living costs. Conclusion, a slow but serious economic crisis. France's loss of African minerals isn't an immediate collapse, but it represents a permanent strategic setback. Long-term deindustrialization risks. A declining energy advantage. Greater dependence on external suppliers and adversaries. In effect, the end of French neocolonialism in Africa could push France toward a multi-decade economic decline unless it radically reforms its economy or finds new sources of cheap resources. If you like content like this, please like and subscribe to keep this channel alive. Thank you. Here is a 10-year projection, 2025 to 2035, for France's economy after losing privileged access to African minerals, particularly in West Africa, uranium, gold, bauxite, oil, and losing monetary control via the CFA franc collapse. Assumptions. 1. Permanent loss of uranium from Niger and gold from Mali/Burkina Faso. 2. Collapse of CFA franc in West Africa, no more reserves in French treasury. 3. African infrastructure projects shift toward Russia, China, Turkey, BRICS Plus. 4. France fails to fully replace lost resource inflows with new suppliers. 5. No major political or military reconquest of African access. 6. Moderate global growth elsewhere, no extreme global depression. Key impacts. GDP stagnation/decline, France's economy flatlines or contracts as it loses competitive access to energy and metals, with industry shrinking. Exploding trade deficit, France's annual trade deficit grows by over 50 billion euros in a decade. Rising energy costs, forced to buy uranium, oil, and gas from costlier or politically sensitive markets. Persistent inflation, French households face higher electricity, transport, and food prices. Structural unemployment, industries tied to cheap African resources shrink, driving joblessness to 11%. Lost global power, France's weight in global economic diplomacy diminishes alongside its economic decline. Geopolitical outcome, likely. France may shift toward German-led European bloc dependence. Greater cooperation with US and NATO to offset resource losses. France might aggressively seek Arctic, Latin American, or Central Asian mining partnerships. Domestic political instability rises as living costs surge and unemployment remains high. Risks not accounted for, could worsen situation. Eurozone financial crises. Massive African default on French debts. French social uprisings, similar to the 2023 protests. Currency devaluation or euro instability. Summary conclusion. Unless France secures new energy and mineral suppliers, this trajectory suggests a structurally weaker, poorer, and less competitive France. Higher domestic unrest. Loss of geopolitical influence, particularly in Africa and the global south. If you like content like this, please like and subscribe to keep this channel alive. Thank you. Scenario 1, Aggressive collapse, hard landing. France suffers a rapid economic breakdown driven by a total CFA franc collapse by 2027. Fast African nationalizations of French energy/mining firms. No replacements for African uranium, gold, or bauxite. Eurozone political instability triggers wider financial panic. Key effects. Severe recession, multi-year GDP contraction. Exploding trade deficit, nearly 200 billion euros annual deficit by 2035. High inflation plus unemployment, stagflation. Industry collapse, loss of car, aerospace, mining, and energy industries tied to African inputs. Mass protests, massive strikes and riots likely. Government debt crisis, risk of credit downgrades and Eurozone crisis. Euro instability, pressure on the European Central Bank to intervene. Scenario 2, Resilient recovery, soft landing. France rapidly adapts and restructures by accelerating green energy transition, solar, wind, hydrogen. Securing uranium from Kazakhstan and Canada. Buying gold and metals from BRICS Plus partners via new trade deals. Attracting foreign direct investment in tech and services. Deepening EU defense and energy integration for shared security. Key effects. Stable GDP growth returns through green tech, innovation, and EU cooperation. Shrinking trade deficit as France boosts exports in aerospace, energy tech, and AI. Controlled inflation with new energy sources. Lower unemployment due to tech and clean energy jobs. Loss of African resources offset by higher value industries and new alliances.